Hello and welcome. As India marches toward becoming the world's third largest economy, there is one silent giant powering this transformation from behind the scenes. While the headlines focus on tech startups and flashy IPOs, the real backbone of India's growth is the infrastructure that ensures electricity reaches every corner of the nation. Today, we are deep diving into Power Grid Corporation of India, a Maharatna PSU that controls the very veins of our power system. This company doesn't just transmit power, it transmits progress. With a near monopoly in interstate power transmission, it handles about 45% of the total power generated in India. For investors, this represents a unique blend of utility stability and aggressive infrastructure growth. Let us explore why this silent backbone is currently charging ahead at full throttle. India's power demand is hitting record highs every summer, driven by rapid urbanization and a massive push for Make in India manufacturing. We are looking at a projected peak demand growth of over 6% annually. To meet this, the government has set an ambitious target of 500 gigawatts of renewable energy capacity by 2030. But here's the catch. You can build all the solar parks you want in Rajasthan or wind farms in Gujarat, but without a robust transmission grid, that power is useless. Power grid is the bridge between these generation hubs and the consumption centers. The Ministry of Power estimates an investment of over 2.4 trillion rupees just in the transmission sector to integrate this renewable energy. Power grid is positioned to capture the lion's share of this massive capital expenditure. When we talk about scale, Power Grid's numbers are staggering. We are looking at over 177,000 circuit kilometers of transmission lines. To put that in perspective, that is enough to circle the Earth more than 4 times. They operate 278 substations with a total transformation capacity of over 520,000 MVA. This isn't just old-school hardware. It is a sophisticated, technologically advanced network that maintains a system availability of 99.8%. This level of reliability is world-class. For an investor, these are moats. The sheer capital and regulatory hurdles required to replicate this network are practically insurmountable, giving the company a defensive position that is rarely seen in other sectors. For the value-conscious investor, the financials tell a compelling story of stability and reward. Power Grid has consistently delivered healthy margins, with an EBITDA margin often exceeding 85%. Because its business model is regulated on a cost-plus basis, its cash flows are highly predictable. This predictability allows the company to be a dividend powerhouse. Currently, it offers a dividend yield that consistently hovers around the 4% to 5% mark, significantly higher than most Nifty 50 growth stocks. Over the last 5 years, the company has maintained a steady compound annual growth rate in its net profit. It's a cash cow that reinvests in growth while lining the pockets of its shareholders, making it a favorite for pension funds and long-term retail investors alike. The future of power is green, and Power Grid is the primary architect of the Green Energy Corridor. This project is designed to facilitate the flow of renewable energy from resource-rich states to the rest of the country. Phase 2 of this project alone involves an investment of approximately 12,000 crore rupees. By integrating high-voltage direct current (HVDC) technology, the company minimizes transmission losses over long distances. This technological edge is crucial as India pivots away from coal. Power Grid isn't just maintaining the status quo, it is evolving into a high-tech green utility. Their role in the One Sun, One World, One Grid initiative further positions them as a global leader in cross-border energy transmission, potentially linking India's grid with neighboring countries. While transmission remains the core, the company is smartly diversifying into high-margin areas. One such area is telecom. Power Grid owns and operates an overhead optic fiber network of over 82,000 kilometers, branded as PowerTel. This infrastructure leverages their existing transmission towers to provide high-speed data backhaul services. Additionally, they are venturing into the smart metering space, aiming to install millions of smart meters across Indian households. They are also exploring the electric vehicle (EV) charging infrastructure market. By utilizing their existing land bank and power access, they can set up charging stations more efficiently than almost any competitor. This diversification reduces reliance on the regulated transmission business and opens up new avenues for exponential growth. No investment is without risk. For Power Grid, the primary concern is the shift from a nomination basis to tariff-based competitive bidding, or TBCB. This means they now have to compete with private players like Adani Energy Solutions for new projects, which could potentially compress their margins. Furthermore, any delays in project execution due to land acquisition or environmental clearances can lead to cost overruns. While their debt-to-equity ratio is manageable, the capital-intensive nature of the business requires constant borrowing. Investors must also watch for any changes in the CERC regulations regarding the return on equity, or ROE, models, as any reduction in the allowed 15.5% ROE could directly impact their bottom line. However, their execution track record remains their biggest strength in this competitive landscape. In conclusion, Power Grid Corporation of India is more than just a PSU. It is the strategic heart of India's energy transition. With a massive pipeline of projects worth over 1.8 trillion rupees over the next few years, the growth visibility is exceptionally clear. Whether you are looking for a steady dividend income to beat inflation, or a way to play the massive renewable energy theme without the volatility of solar manufacturers, this infrastructure giant offers a compelling case. As India powers up for its golden decade, the silent backbone is no longer just standing still, it is charging ahead. Thank you for joining us today. Before you invest, consult your financial advisor to see if this utility giant fits your portfolio. Don't forget to like and subscribe for more deep dives into the engines of our economy.